FHA Mortgage Insurance Premium is required for the life of all FHA loans. So if you're in the market for an FHA loan, then you definitely want to watch today's video. Roll the intro. Mortgage insurance protects banks against default, and FHA loans are no exception, given the fact that most FHA borrowers put down less than 20%. But first, before jumping into all that, I'm Damien L.Grant, a licensed mortgage advisor, and in this video, you'll learn exactly what FHA MIP is. So, what is FHA MIP? First off, there are two types of mortgage insurance premiums in the loan. You have upfront MIP and annual MIP, and all FHA borrowers pay MIP no matter how much they put down. The insurance isn't dependent on your loan-to-value ratio like conventional loans. It's a fee FHA borrowers pay no matter what. MIP provides lenders with coverage in case you default and ensures the bank some money back. For the most part, FHA borrowers pay an upfront MIP, which is submitted directly to HUD and collected by the U.S. Debt of Treasury's automated collection service and put into an escrow account. Plus, there's an annual MIP that's divided monthly and paid for the life of the loan. All FHA borrowers pay the same upfront MIP at 1.75% of the loan amount. For example, if you borrow $200,000, you pay $3,500 at closing, either financed in or added to the closing costs. Now, as for FHA annual MIP, the cost varies based on the loan-to-value ratio. To learn more about LTVs or loan-to-value ratios, I'll leave a link in the description below. Now, the most common factor to use for annual mortgage insurance premium is 0.85% of the loan amount. Since most FHA home buyers borrow less than $625,500 and bring in less than 5% skin in the transaction. Now, the annual mortgage insurance premium can decrease or increase in certain situations. Check it out. Now, if you borrow less than $625,500 but make more than a 5% down payment, the annual MIP is 0.80% of the loan amount. And if you borrow more than $625,500 but make more than a 5% down payment, the annual MIP would be 1% of the loan amount. And if you borrow more than $625,500 but make less than a 5% down payment, the annual MIP would be 1.05% of the loan amount. Now, bringing this all together, this is how it will look. If you borrow $200,000 and put the minimum 3.5% down, your upfront MIP would be $3,500, financed or paid at closing, and your annual premium would be $1,700 divided by 12, which would be $141.66 monthly added to your mortgage payment. Oh, and as a side note, all these scenarios are based off loans over 15 years. FHA loans financed under 15 years, the annual premium is lower. Now, unlike conventional loans, private mortgage insurance or PMI, FHA MIP does not cancel. Even when you owe less than 80%, the annual mortgage insurance premium will still be there. Now, I know you might be thinking, do I really want an FHA loan? Truth be told, FHA loans have some of the most flexible guidelines, allowing lower credit scores and higher debt ratios with as little as 3.5% down. So don't give up on FHA loans yet. They're excellent loans to help secure home financing. Consider FHA MIP as a trade-off for the flexible guidelines. Now, down the road, you can get rid of FHA MIP. One of the most common ways for FHA borrowers is to wait until you owe less than 80% of the home's value and refinance into a conventional loan. Now, there is a caveat to this. Conventional loans are tougher to qualify for. So make sure you're responsible with your mortgage with on-time payments before trying this. Plus, work on your credit and debt-to-income ratio to make sure you meet conventional standards. Another option, if you choose not to refinance, is to double up on your principal payments and pay the FHA loan off in full if possible. You can pay a 30-year loan off much faster by making extra payments toward the principal. So I hope I gave you a better understanding about FHA Mortgage Insurance Premium. But if you still have questions about MIP, let's get on a call. I'll leave a link to my calendar in the description below. And if you like this video, smash that like button, subscribe, share it with your family and friends. Comment below on how helpful you found this video and what your biggest takeaways were. I look forward to receiving your feedback and giving you some responses as well. I'll see you on the next video, and thanks for watching.